Are you sick of the tax system here in the UK? Like the fact that after the recent budget, capital gains tax has jumped to 18% and 24% depending on your earnings. Don't worry, because in today's video, we'll be looking at some clever and obviously legal ways to keep more of your crypto gains in your pocket, and less with the current government who are trying to run the country. Whether you're a long-term investor, you've just started investing, or you're thinking about it, the info I'll be sharing with you today has you covered. Okay then, legal ways to be more tax efficient here in the UK. To start things off, we'll look at how UK crypto taxes actually work. So, when are you required to pay crypto tax? 1. When you sell your crypto for GBP or another fiat currency. 2. Trading one cryptocurrency for another. 3. Using your crypto to buy goods or services. 4. Earning crypto through things like staking, mining or airdrops. By the way, I'm not a tax expert and this isn't financial advice. I'm just a long-term crypto investor doing my best to help you with my experience. Okay, here's a list of ways you can be tax efficient in crypto. 1. Hold your crypto long term. Not selling crypto means you don't pay tax. This strategy works for long-term investors. 2. Use tax-free allowances. Here in the UK, we have 2 tax-free allowances. You have capital gains tax-free allowance of £3,000 for gains from crypto and other assets, and you also have income tax-free allowance of £12,570, and this includes your income, not just crypto earnings. 3. Gifting crypto to your spouse. This helps you to legally avoid taxes, because if you send your Bitcoin, Solana or any other altcoins to your spouse, it's tax-free. And depending on your spouse's work situation, on their income, they can use their own tax-free allowance. For example, if they have no income, they have £3,000 plus £12,570 of tax-free allowance to use, which is a total of £15,570. So this is you and your family spreading your gains and reducing your overall tax bill. 4. Another strategy is to invest in a UK ISA, and this is essentially a tax-free investment wrapper. Now, you can't just put your Bitcoin or your altcoins in your ISA, but you can get exposure to crypto via your ISA by investing in individual stocks or something like an ETF that contains cryptos within it. Personally, I've invested in a Coinbase and MicroStrategy via my ISA. This gives me exposure to crypto, and gains I make are tax-free. 5. Yet another way is charity donations. So if you donate crypto to a charity in the UK, this is tax deductible. So you're doing good by giving to a charity, and you're reducing the tax you'll pay on your gains. 6. And finally, you can use crypto losses to offset any gains you make. So if it doesn't go well with one of your cryptos and you sell at a loss, you save on your tax. Let's say in a given year you make £10,000 on one crypto but lose £3,000 on another. Well, in this scenario, the taxable amount is £7,000. Also note that your unused capital loss can be carried forward into the future. To track your crypto assets, you can use software like Coinly, or you can use a basic Excel spreadsheet. Personally, I use a spreadsheet because I only have about 15 positions in total, and it's quite easy to manage. I would say if you're a long-term investor like me, you can get away with an Excel sheet. But for day trading, you're probably best off getting some sort of software to track your crypto tax. No one likes tax, but it's just a fact of life. And us crypto investors need to be on top of it to keep the taxman at arm's length. So I would say it's best to keep updated records of all of your crypto transactions. Consider professional tax advice to stay compliant and optimize deductions, and don't miss key tax dates. The current tax year runs from 6th of April 2024 to 5th of April 2025, and self-assessment returns must be filled by 31st of January 2025. Again, this isn't tax advice, it's just information from me to you. To wrap things up, let's finish with a little example. I'm going to imagine we have a mutual friend called John. Now, John purchased one Bitcoin in May 2020 and paid $7,100. In May 2021, he sells his Bitcoin for £38,000. 38 minus 7,100 equals 30,900. This is John's capital gain. John earned 70,000 in 2021, so he would have paid 20% on capital gains, less his tax-free allowance, which was 12,300 in 2021. Okay, so to find the taxable amount, we do 30 minus 12,300 equals 18,600. Times it's by 20%, so John's going to pay 3,720 in tax. Obviously, the figures have changed a bit because the tax situation has got a bit worse. But you get the point, it's just an example. But what after all this information on tax, you're a bit lost, you're not sure what to buy? Well, if you see below, there's a recent video I published where I cover my top 2 cryptos for 2025. Hopefully you've taken value from today's video. If you have, hit the like button and subscribe to the channel for more similar content. Thanks for watching and good luck with your crypto investing.